Hey, welcome to the 40 Finance channel, everybody. My name's Jeff Beers. Today we're going to look at a few growth plus value names. These are some stocks as the market has kind of melted down here a little bit over the past couple weeks that give you a lot of bang for your buck in terms of EPS and growth forecast. So a little mix of both. You're not going to see the usual headlining stocks, the rockets to the moon and all those things. But if you're a serious long-term investor and you're looking to balance out your portfolio with some great names that are continuing to grow in the future, then you'll enjoy the stocks on this list. Reminder as always that my stock picks and projections, they're just my opinion for your entertainment. Please make sure you do your own research before investing. And most importantly, if you want to help out the channel, please like this video, subscribe to the 40 Finance channel. Thank you to everybody for your support. Okay, so for this video, I'm trying out Seeking Alpha. Eventually, I'll do a review of the platform, but I've used some of their screeners to identify the names, and we're just going to go through them. The first one is Micron Technology. And I do like here how Seeking Alpha kind of grades their sector relative metrics. And if we look at MU, we're looking for GAAP PE. They've given Micron a B+ with a forward PE of 23.17. The sector median for the chip sector is 32, which is minus 28%. Now, some stocks also have a 5-year average. It does not look like that's showing up for Micron. All right, now switching over to Yahoo for a format you guys are used to. Taking a look at the EPS chart here from the analysts. We got 27 analysts. Year ago at 283. This year getting up to $4.71. And next year, expected to basically double that, I guess a little bit short of doubling, but very exciting from a EPS growth standpoint. And then on the revenue side, projection this year of 22%. So we're going from $21 billion up to an average estimate of $26 billion, and next year hitting $33 billion, which is a 26.5% revenue growth. And finally, at the bottom, looking at the EPS trends, you can see 90 days ago, the EPS for the year was projected at 3.8 or $3.80. You can see how that has climbed. We're up to 471 now. And 90 days ago, 2022 checked in at $7.11. And we're already up to 886, and the year's not even close to being done yet. So Micron looks like a strong growth and value play, certainly over the next 2 years. All right, next stock on the board is FedEx Corporation. Going down to GAAP forward PE. You're getting an A- on the sector grade, coming in at 1537 for a forward GAAP PE. Sector median of 25, they're minus 38% behind that median, which is a good thing. This is a positive negative in this case. And interestingly enough, FedEx has a 5-year average of forward PE at 1445. You're only 6% above their 5-year average despite these current conditions with low interest rates and whatnot. So definitely looks, at least at one metric, like a value here with FedEx. All right, peeking over at Yahoo on the analysis tab, EPS-wise, last year you're $9.50. Look at this year, almost doubling up to $17.40 if they hit their projections. Next year, not quite as much growth anticipated next year, about $1.50 or so they would add to fiscal year 2022. Down on the revenue column, we got 15% growth projected from $69 billion to $79 billion, then jumping to $84 billion. So next year definitely slows down, looking at about a 5% growth rate. But if we look at the trend line over the last 90 days, even though 22 is coming out slower, it is still growing. So they have already added, analysts as a whole have already added 73 cents to the anticipated total, and they've already added $1 to this year. So FedEx looking like a strong candidate, at a good price right now. All right, next stock on the board is JinkoSolar. This is a Chinese solar module manufacturer or solar panel manufacturer. And if we look at their forward gap PE, you've got an A minus. Jinko's coming in at 1929. Sector median, don't forget, solar stocks are running very hot even after the recent sell-off. Sector median in this category is 32.33, so they're 40% off the sector average. And it looks like their 5-year average is decently lower at 12.26. But to be honest, you're seeing a lot of this nowadays because of interest rates and whatnot. Perhaps it'll go lower, but in relation to other solar stocks, this 1929 is minus 40% off the average. All right, over in Yahoo, a year ago EPS of 329. This one actually has a negative comp scheduled, 323, at least from projections. That's what it looks like at first, except you see right here, the current year is 2020. So they have not yet reported their full 2020 results. And so if we look to 2021, you're adding whatever that is, 32 cents or so into 2021 for an average estimate of 356. Scrolling down to revenue, year ago at 4.27 billion, jumping up hopefully for the fourth quarter report at 5.12 billion. Next year adding just short of $1 billion to the revenue line. And lastly, on the EPS trend, I'm just going to focus on this year. It started out 90 days ago at 4.02, and now it's staying flat. As I walk through this exercise here, I'm having sort of second thoughts on Jinko because it's not showing the same momentum as some of the others, at least from an EPS category. So I guess I would just come in and say on Jinko, make sure you do your research because there is some conflicting reports on its potential growth, perhaps not quite as fast as Seeking Alpha was thinking. All right, next on the board is Taiwan Semi. This is a stock that I own. Forward gap PE coming in as a B minus at 29.83. Similar to Micron, sector median of 32.33. So Taiwan Semi is running underneath that sector median. However, their 5-year average at 13.55, that is considerably higher. So you're going to have to ask yourself, what has changed over the 5-year average? I can tell you one thing that's changed significantly is the demand for chips, and that's why I'm banking on TSM. But let's take a look at their growth projections. All right, on Yahoo, you have year ago EPS of 339. This year, that's supposed to jump to 397. That is also in the midst of building a huge factory out in Arizona. They have a lot of capital spend this year, so this 60-some cent increase in EPS, that is actually very good. 2022 jumping to 457 on the projections. Scrolling down to revenue, we got potential 20% growth from 45 billion up to 54 billion. Next year at 55 billion. This has been the big case with semis. That this year is going to be huge because production's behind, and next year not as big. I tend to disagree with this a little bit, only because I think the shortage is going to last a lot longer than people anticipate, because the demand for chips and the things that they're used in just keeps getting bigger. The use case just keeps getting bigger. But technically, on the analyst front, you only have a 2% growth rate next year. If we look at the trends, 90 days ago, TSM was at 360. They actually bounced over 4 and have settled in at 397. So you've got, about a 10% increase over the past 90 days. When we look at 2022, you're actually getting a bigger increase from 393 up to 457. So TSM, I guess in my take is, maybe you can shave a little bit off this price. We sort of have a volatile market right now, but generally speaking, knowing that they also have a strong dividend, This is a stock that I personally am very happy owning. All right, next on the board is Ally Financial. Got a forward PE of an A minus, coming in at 10.20. Sector median is 13.27. So Ally's about 23% off of that. They don't have a 5-year average because I don't think that they have had full profitability that long, quite honestly. But, bank sector's hot right now, so finding value in a name you trust within banks is a good thing. Let's take a look at what their growth looks like. All right, year ago EPS at 303. Average estimate for this year jumps up $1.50 to 453. Next year, adding another $1 to that. And on the revenue side, interesting, they're projecting negative revenue for 2021. So 764 down to 718, then jumping to 764 again in 2022. So this is interesting because the EPS is projected to grow. It makes me wonder if there was a one-time cost or a one-time fee or whatever expense associated with COVID that is still going to impact 2021, but not 2022. You definitely have to read up on Ally. But worst case scenario, it's a good starting block for the financial sector, which is projected to grow as a category this year fairly strong. All right, next on the board is General Motors. We have a forward PE of 11.08. Sector median comes in at 20.45. That's minus 45% off the sector. Their 5-year average is 17.68. They're obviously coming in under that by quite a bit. And with GM, you sort of get that outside shot at electrical vehicles as well. And I know Volkswagen stock recently jumped quite a bit. I don't know if that'll ever happen with GM, but from a pure earnings and revenue play, this one certainly seems to offer some value. All right, on the Yahoo side, we have $4.90 EPS last year, projected to jump a little bit to 518, but then a big jump actually next year, 624. On the revenue side, you got a potential 14% this year from 122 billion up to 139 billion. Follow that to 147. So they're saying 14% followed by 5.3%. And lastly, on the EPS trends, looks like you got analysts actually backing off of some of these EPS numbers. 587 90 days ago. That's actually shrunk to 518. Last year, 642. Next year, 642 has shrunk down to 624. So again, with GM, kind of mixed signals, but it's more like an EPS profitability signal. So that's where you would just have to figure out maybe there's added costs coming in because these revenue numbers are actually jumping pretty good. But keep in mind that EPS is going to be sort of where we started by looking at the forward PE. So I just don't want to lead you astray. It does look like the trend right now is down just a little bit for GM. All right, guys, so those are some stocks that are showing pretty good value signals in terms of forward PE. And each one has their own little growth story to go along with it. So just the exercise here is really just taking a starting point, which in this case was forward PE, using the Seeking Alpha tools, and then just digging in a little deeper to see like, hey, the forward PE is just a number by itself. What happens if we dig into revenue and EPS trend to see like how strong are these current ratings? And you can see it was a little bit of a mixed bag. Some of those stocks had kind of like 5 stars across the board and everything looked good. But then others had questions where you're just going to have to dig into the investor report and see, what's going on. But hopefully these names spurred some ideas for you. Just as a quick reference, I did check all the FANG plus M names just to see if any of those qualified as a good value from a forward PE standpoint. And at least in Seeking Alpha, none of them got a grade over a C. So even Facebook, that kind of surprised me. But since I was using that as a starting point for this exercise, I kind of stuck with it, and if it didn't grade out, then I wasn't going to use it. All right, guys, hope you enjoyed this video. Please give me a like and subscribe if you did. We'll see you on the next video.